Well, I think there are two factors that may prevent that happening. First of all, we have the next meeting from the FOMC, where there is the potential for the start of tapering. I personally don't think that will happen, but certainly that would put a dampener on a end-year rally if it did happen. And secondly, of course, we may see some profit taking. As you said, it's been an excellent year. Many people may decide now's the time to lock some of that in. I think it really depends what kind of tapering we see and how the Fed signposts or signals that process to the market beforehand. The very aggressive sell-off that we saw earlier this year was largely due to the fact that the market believed that QE tapering was going to be a short, sharp shock, that the Fed was going to taper almost regardless of what the economic data said, and that it was going to do so in an accelerated fashion. I think since then the Fed have made it very clear that if we do see tapering, it's likely to be a much more measured, much more gradual process. And in that respect, I think the emerging market reaction should be more limited this time round. Well, you have the backdrop of this QE tapering, which will dictate to a large extent what the overall macro flow position looks like. But then you also have specific country factors to deal with. In India, it will be very much about politics. Are we going to get election results that will increase investor sentiment? Hopefully we will, but that remains to be seen. And in China, it's all about the reform process. The government has spoken in some detail now about what it plans to do in terms of structural reforms. Will it push ahead with those? And if it does, my feeling is that actually GDP growth could decelerate rather than accelerate, and that the reform process will mean slower growth rather than faster growth in the near term. And that may actually dent inflows for a while. Well, broadly, of course, there's the macro backdrop of how we deal with reduced liquidity coming from the US, or reduced injection of liquidity, given that tapering is not tightening, and that needs to be underlined. But at the same time, really, across most emerging markets, it's a question of structural reforms. How will each market deal or grapple with the particular problems that it's facing in terms of increasing overall economic efficiency? In some countries that involves dealing with political vested interests, and in others it involves dealing with knotty economic problems. But each country needs to face up to that process in 2014.